And my first pick is one of the hottest companies in 2018. So when I say hottest companies of 2018, most people would think companies like Apple, companies like Amazon, or even a company like Nvidia. But if those were your guesses, then you would be wrong, because the hottest company of 2018 is... What's going on, guys? It's Investing Hustler here, and today I'm going to talk about my top 2 stocks for the month of September. So before we get started with my top 2 picks for the month of September, let's talk about my top 2 picks from last month. And let's talk about my big winner, which was Paycom. So I made my last video on July 5th when Paycom was valued at $101.37 per share. So I like Paycom as a long-term investment. If I buy Paycom, I plan to hold those shares for up to 5 to 10 years. And today, Paycom is up over 33%, valued at $138.26. And the main reason is Paycom beat their earnings, and in that one day, Paycom went up over 18%. So if you invested into Paycom when I released that video, you would be up over 33% today. And my second pick from my last video was Tencent. And Tencent actually hasn't been doing too well. Tencent is actually down over 10%, but I did mention that there was a lot of trade tension going on within the US and China, which is one of the reasons for Tencent's downfall. The trade tension that's been going on between the US and China, which has brought the share prices from a high of $61 and now currently sitting at $52, which shows. But I still have a lot of confidence in this company, and I still think it's a great buy at an even cheaper value today. But that's all for my picks from last month. Let's move on to my picks for the month of September. And my first pick is one of the hottest companies in 2018. So when I say hottest companies of 2018, most people would think companies like Apple, companies like Amazon, or even a company like Nvidia. But if those were your guesses, then you would be wrong, because the hottest company of 2018 is Turtle Beach, ticker symbol HEAR, HEAR. So there's no other way to put it. Turtle Beach has been on complete fire. From January 2nd up until August 3rd, Turtle Beach has been up over 1,700%. Yes, that's right, 1,700% in just 8 months. So that means even if you only invested $1,000 into that company, in just 8 months, that $1,000 would have been worth $17,000. And that's only in 8 months, which is ridiculous. That's like some Bitcoin numbers. That's a scam! Now people may ask, why would you invest into a company that has grown so much in such a small amount of time? Because you know what they say, what goes up must come down. Well, since August 3rd, Turtle Beach has dropped over 13%, and they're up over 1,300% year to date. I would consider Turtle Beach a very high risk stock. I actually did start a very small position in Turtle Beach, and I put a little bit over $3,500 into Turtle Beach. So I now own...
A few moments later.
And I now own 142 Turtle Beach shares. Like I said, Turtle Beach is a very high risk stock. So why have Turtle Beach share prices rise at such an unreal number? Well, the answer is pretty obvious. So Turtle Beach's rapid growth is being driven by the hottest video game this year, Fortnite Battle Royale and Battlegrounds PUBG. Most of these players use headsets, and Turtle Beach is known for their wide selection of industry-leading award-winning gaming headsets. So everyone thought the numbers were amazing last quarter when revenues increased 185%, but as it turns out, that wasn't even the mountaintop. This quarter, Turtle Beach reported revenue growth of 218%. So pretty much this company has just exploded and has seen an unreal amount of gains in the past 4 months. But share prices have recently been dropping, which kind of gave me an opportunity to start off a small position in this company. And as you guys know me, I'm all about high risk, high reward. That's why I'm invested into marijuana stocks, and that's why I'm investing into Turtle Beach. It's a very risky stock, and it has the potential to keep climbing up, or share prices can easily just drop. So how low can Turtle Beach go? Or is Turtle Beach just gonna bounce right back up and continue to do unreal numbers? That's a really big risk, but who's actually willing to take it? Well, that's enough about Turtle Beach. Let's move on to my second company, which is Alibaba. So Alibaba is a Chinese multinational e-commerce, retail, internet, AI, and technology conglomerate founded in 1999. Alibaba is often compared to Amazon and continues to look more like Amazon every day. Some investors may look at this as a good thing, and others may consider this a bad and a risky move. Why would it be a risky move? Well, every time Alibaba tries to steal a page from Amazon's playbook, it costs them more and more money, which chips away from their profits. Some investors may be turned off by that. others may be more forgiving. Another thing to note is since June 14th, when Alibaba reached their all-time high of $210.86, Alibaba has dropped. So since June 14th, Alibaba has been down over 18%, which I love to purchase companies on the downfall, especially if I believe that they're gonna bounce back up and reach or beat their previous all-time highs. So another thing to take note is hedge fund giant Bridgewater Associate, with about $160 billion under their management, has added 84,629 shares of Alibaba, which is worth over $15.7 million to its holdings, alongside with other companies like Amazon and GameStop, Alibaba being their biggest investment. So to sum it all up, I think Alibaba is very undervalued, especially at a 46.1 PE ratio. When you compare that to companies like Amazon with an over 152 PE ratio, or when you compare that to their competitors like JD.com with a PE ratio of 279, Alibaba seems like a bargain to me, and I do plan on one day adding that to my long-term investment portfolio. Also, let's not forget to mention Alibaba does release earnings on August 23rd, and I have a good feeling it's gonna bounce back up, especially if it beats its earnings. So Alibaba could also be a good potential swing trade. It's a very good long-term investment, and between the two, between Alibaba and between Turtle Beach, I think Alibaba would be the safer bet, and Turtle Beach is definitely a higher risk. Well, that's all the time I have for now. I hope you guys enjoyed this video. If you did, don't forget to leave me a like, and if you're not subscribed yet, then smash that subscribe button. And I'll see you guys next time. Bye.